Welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust or even a donor advised fund is an amazing way for you to exit highly appreciated assets, defer capital gains tax, so you can create and preserve more wealth and make an impact with your wealth. Hey, I'm your host, Brett Swarts. In each episode, I'm joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He's out of Los Altos, California, where he is on a mission to help you exit highly appreciated assets using a donor advised fund. Be able to give back and be able to make a difference, make an impact while still having tax advantages, which is so key, right? Especially in California, which some high tax places. But of course, if you're anywhere near the Silicon Valley where he's located, there's a huge amount of tax that you're looking to pay. So we're going to be diving into that. Please welcome to the show with me, Adam Nash. Adam, how are you doing?
Great, Brett. Thank you for having me.
Excellent. And for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Sure. Pretty typical Silicon Valley story. Grew up in the area, focused on computer science. I've worked for great companies like Apple and eBay, LinkedIn, Wealthfront, where I was CEO for 4 years, Dropbox. And now I have a new company, a nonprofit called Daffy.org, where we focus on helping people be more generous and then put money aside and assets for charity.
Amazing. And Adam Nash, by the way, you can learn more about him by going to daffy.org. And it's just how you think it would be spelled, DAFFY.org, DAFFY.org. Adam, before we dive into the topic at hand, which is using a DAF to your tax advantage, I'm curious. I want you to go back maybe to the younger days growing up there in the Bay Area. What would you feel like your number one strength or strengths that you believe you were given, and how does that help how you help and bless people today?
Well, look, I've always been fortunate. Probably the greatest fortune I had was to have two wonderful parents who raised me, both doctors in the Bay Area. I was the first engineer in the family, as they say. But for me, it's just a matter of curiosity and looking for ways. I've always been fascinated with technology. And thanks to Moore's Law, it keeps getting faster and better every year. And so my entire career has been about bringing technology to new areas where it can add value to real people. So whether that was, early websites like eBay or more modern sites like LinkedIn and Dropbox, or even, this new wave of fintech where, I ran Wealthfront for a number of years trying to help people get low cost, high quality financial advice online. I feel the same way about charitable giving. I feel like this is an incredibly important area. Americans are very generous. They give almost $500 billion a year to charity. About 60 to 70 million households in the country give to charity every year. But there are better ways to do it, right? You don't have to just randomly write a check whenever someone asks you. Like, there are more thoughtful and intentional ways to take your success and spread some of that wealth to the causes and organizations you support.
Beautiful. So finding ways to do things better, more efficiently. It's part of the foundation of the entire Silicon Valley, right? In a way that's going to make an impact and difference for others while still making a profit. I love that. So let's dive right into the topic at hand. So Adam, what is the number one secret to using a donor advised fund to your tax advantage?
Believe it or not, the number one secret is just to know that there is such a thing as a donor advised fund. Donor advised funds have been around for decades, and yet most people have never heard of them. If you don't have a professional financial advisor or a high-end accountant, most likely you've never heard of this type of account, but it's not that complicated. We're used to having individual retirement accounts and 401ks for retirement savings, or 529s for college savings. There's different accounts for everything. And the donor advised fund is just a great tax advantaged account for money and assets that you're putting aside for charity.
Excellent. So it sounds like the number one secret is just to actually be aware that it actually exists. So what's the number two secret to using a donor advised fund to your tax advantage?
Well, yeah, it's probably worth going into a little bit of what the donor advised fund is. So the idea behind the donor advised fund is they can only be offered by nonprofits themselves, right? Daffy is a 501c3 registered not-for-profit organization. And by putting assets and money aside in this account, you get this immediate tax advantage because by putting money in the account, that counts as the charitable donation, right? So if you're like a lot of us, you have some good years, some not so good years. Of course, in our tax system, those good years are very, very expensive. Those are usually years that you want to put money aside for charity. But you don't necessarily want to give it away all at once, and you don't necessarily know who you're going to give that money to. Unfortunately, our tax system is very strict, right? It's from January 1st to December 31st. And so if you have big gains in a year, trying to rush and figure out where to give your money is a real problem. So the great thing about a donor advised fund is it just separates those two problems. The problem of how much you want to put aside for charity versus who you're going to give that money to. And so donor advised funds let you put money aside now, get the tax benefit now, and then you can spend time figuring out which organizations and causes are the best recipients of your money.
You can learn more about Adam Nash by going to daffy.org. That's daffy.org. So it sounds like the number two secret there is just the flexibility with timing, not only timing for the amount that you want to put in per year, but also the timing for who it's actually going to go towards, because you might be a entrepreneur, real estate investor, someone who's building massive wealth in the tech industry, cryptocurrency, whatever. And you're like, hey, I want to give, but I'm so focused on this. I don't know who it's going to be. I have these 365 days to do it in this year. I can open up a donor advised fund, but I don't have to decide who it's going to go to. I just know I'm going to be giving it to charity. Is that a fair summary so far, Adam?
Yeah, that's right. So number one, you want to know what a donor advised fund is and open one. And the second one is, in any good year where you're going to face significant gains, those are the years you want to be funding your donor advised fund.
Excellent. So what would you say the next secret is, or the thing that's most commonly overlooked when it comes to the donor advised fund and using it to your tax advantage?
Well, this is the big one. So number three is, whenever possible, you should be donating money with assets and not with cash, right? Appreciated assets. The charitable donation by itself is one of the most generous deductions in the entire tax code. But you get a double benefit when you donate assets because you win two ways. One is, of course, you get the full charitable deduction for the amount, the market value of what you donate. So if you bought Apple stock at 10 and now it's at 160, so it's up $150 a share. When you donate that Apple stock, you not only get the charitable deduction for the $160 it's worth today, not what you paid for it years ago, but also you'll never have to pay those capital gains taxes. It's one of the few cases where it's a real win for you in terms of your taxes, but also it's a huge win for charitable organizations because, of course, when they receive that $160, they don't have to pay taxes on it either. So it's a wonderful way to get money and capital to the causes and organizations that you support the most.
Absolutely love that. So make sure I caught that. So let's say you had $16 million of Apple stock that you've accumulated over the years through either purchasing it yourself or just as an employee of Apple stock, being rewarded that. And let's say that basis happened to be about $1 million, but now it's appreciated to, let's say, 16 million, right? So you have a $15 million gain. What you're saying is, hey, you have a chance to just, you could just donate all of those assets to a donor advised fund, and it's going to get a full basis, meaning you've eliminated that capital gains tax, right? Because it's now full basis with the donor. And then number two, I'm sure I caught that. You pay capital gains tax, but I don't guess what the other part was. I missed the second part, Adam.
The other part is when you contribute that stock, you get the charitable deduction off your taxes. And remember, the charitable deduction on your taxes does not come off capital gains. It comes off your income. And actually, it's a very generous deduction. Up to 30% of your adjusted gross income in any year can be deducted when you donate stock or crypto, anything with appreciation over 1 year, long-term capital gains. And so that's the double win, is you get the charitable deduction off your income taxes in the year you make the contribution, and you never have to pay the capital gains taxes on those assets.
Okay,
And
let me
of
break it
course,
down fast. We got it, because this is huge, right? I didn't quite know this nuance on this, and so let's make it simple. Let's get a $10 million gain on a primary home in Palo Alto you're selling, or an investment property of no basis. You fully depreciate, make an investment property, and so not only do I not have to pay the capital gains tax, it's gone, but then also they're going to give me up to 30% off of my adjusted gross income as a deduction. So I think I caught that. So on 10 million, would that be, and I made, let's say, $1 million in a given year, would I be able to use, is that a $300,000 off of that 10 million? Then does it carry forward every year, or what am I missing there? Put those pieces together.
Yeah, it's pretty simple. So I think that, to use your example, if you have a large gain in a year, right? You have this asset. Actually, with a real estate transaction, it's not the best example because even though you can contribute real estate to donor advised funds, it's kind of an all or nothing deal, right? You donate the property, you don't donate the property. But if you're thinking of something like your Apple stock example, it's very simple, right? Like, let's say that you are fortunate enough to have a large position in Apple that's appreciated by millions and millions of dollars. You could sell all the shares and trigger an immense capital gain, and that's fine. But I mean, in a state like California, right, you have the full California tax up to 13.3%. You have the federal tax, the Medicare surcharge. It can really add up 37% pretty easily. But instead of selling all your Apple stock, instead you can sell part of your Apple stock and then donate the remainder and put it in a donor advised fund. And so when you do that, you get this double win. You get the tax deduction for having donated that Apple stock, right? So if Apple's at 160 a share, you get that full $160 per share to write off on your income taxes up to
Got
30.
it.
Yeah. And then
Okay.
second, of course, that stock is then invested tax-free in this donor advised fund, which you can use to give to charity, to any legal charity in the US, pretty much. That's in good standing with the IRS.
Got it. Okay. So now I'm thinking, now it's kind of coming together. So what you're saying is, it's a good way to offset. So let's say you had 5 million, $10 million gain, and you might take, you might donate 5 million of it to the donor advised fund, and you might take 5 million personally. And, depending on how it all shakes out, it could offset itself. It's sort of like having depreciation, or you're basically creating a loss in that same year, right, to offset your gain.
It's not a loss. The charitable deduction is its own thing, but you're right in terms of thinking of the balance. And this is what professional advisors do and accountants, right? Like, I was the head of product at LinkedIn, which is a company that went public in 2011. And so, fundamentally, you had a lot of early employees, founders, who have stock with immense capital gains because they had bought the stock when the company was very small and was inexpensive, and they've been working there for years. And so what happens is that campus is overwhelmed with advisors and accountants who tell them that simple thing, which is like, listen, think about how much you give to charity every year, multiply that by 10, and think about, instead of selling all of your stock and triggering that gain, only sell part of that stock and then donate some of that stock into a donor advised fund. You get that charitable deduction, which you're 100% correct, helps offset the capital gains from the sales you've made that year. And plus, you have this tax-free account that's now invested and compounding, that you can use every year to give to the charities that you care about, whether it's, a church or a synagogue, whether it's your kid's school, whether it's a university that you're appreciative of, a major organization, pretty much any legal charity. And so you really get this win-win, but it is perfect for years where you normally would be triggering a large capital gain, right? It makes no sense to trigger that full gain if you're the type of person who regularly gives money to charity. You're giving money to charity anyway. You might as well do it in the most tax efficient way possible.
I absolutely love this. This is great. Adam Nash, you can learn more about him by going to daffy.org. That's daffy.org. So I'm curious, Adam, what's the biggest objection or the biggest challenge that you have to help people overcome when it comes to using a donor advised fund to their tax advantage?
Well, the thing that people don't like about the donor advised fund the most is actually one of the features that is tied directly to its tax benefit, which is the fact that when you put money into a donor advised fund, you can't withdraw it, right? This isn't like a retirement account. There's no 10% penalty. Money you put aside for charity, and you take that tax deduction for giving money to charity, that money is put aside permanently as far as the government's concerned, right? You are giving that asset to the donor advised fund, which means you can only use it for charity. And what I tell people is I say, listen, don't put so much money in a donor advised fund that you might need it for something else, etc. If you're like most people, you have a philosophy about giving. I know a lot of people who give 1% of what they make every year to charity, 2%. And of course, there's some people who give even 10%. But whatever that number is that you give to charity, most people give that number almost every year. Maybe they give a little bit more in good years, maybe a little less when times are tough, but they roughly know what they give to charity every year. By the way, it probably is on your tax return for the last number of years. Just take that number, multiply it by 10. And in good years, that's a great way to kind of make sure that you put the right of money aside in a donor advised fund for charity, get the tax benefit, but actually only put aside money that you were going to give to charity anyway. This is just a better way to do it.
Interesting. Okay, so yeah, I'll make sure I caught that, because I think I caught it, but my listeners may or may not have. So if I normally give $100,000 to charity every single year, what you're saying is, hey, set aside something that's highly appreciated, such as stock would be an easier way to do it, because you can sell pieces of it. Or if it's real estate, you got to sell the whole thing, right? So if you have a $5 million asset, it may or may not be a great thing for a donor advised fund, because it has to be 100%. But if it's stock, you can sell shares of up to $100,000 in that same year, Adam, right? And not only you're going to get the ability to give, just like you would have give $100,000 of your income, but that would be post-tax. But you're also going to get the charitable deduction off of your other amount. Did I catch that right?
Yeah, you've got it right. That's exactly right. And actually, by the way, donor advised funds scale to amazing sizes. There are donor advised funds that are in the billions. I've actually talked to someone who had a donor advised fund of over $300 million funded by real estate. So it really comes down to how much you give to charity every year and where you are in your career. And as some people would say, your philanthropic journey, in terms of where you want your wealth to go as you age. But fundamentally, yes, you want to fund that account. If you have a lot of appreciated assets, stock, real estate, crypto, and you are the type of person who gives $100,000 a year to charity, fantastic. Love that you are that generous. You don't have to just put $100,000 into this account. You can say, well, I'm going to give that much or more over the next 10 years. You put aside $1 million in stock, avoid that capital gain. And now that $1 million is compounding tax-free every year in a diversified portfolio. And you can give that money to charity anytime, right? You want to give money to your university? Fantastic. If you want to give it to your kid's school, great. Your church, your synagogue, wonderful. Whatever cause you want to give to, whatever organization, you can give it to out of the donor advised fund. But the real advantage is you have control with a donor advised fund of when you take that deduction. It doesn't have to be the year or the day that you give it to the end receiving organization. It's just when you put it in the donor advised fund.
Okay, so I think I'm bringing it all together now. So I say, hey, I got $1 million of stocks, appreciate it. And I decided to put it in 2022. Let's say I put it in there, right? But in 2023, I have a low income year, or I retire from that big company that I just sold, right? Or whatever, right? And it's not necessarily advantageous for me to take the deduction in 2023 or 2022, right? But let's say 2025, whatever, I have a huge year and everything's going great. I have a huge taxable event income-wise. I could basically tap into that $1 million that I had given previously a couple of years back.
Oh, no. I sorry. I want to make sure that this is right. Okay. It's the other way around, right? So the way it works is that you have a good year, right? You're selling your business, you're selling off a large position, stock, et cetera. That's going to be an expensive year. So 2022, that could have been your expensive year. Maybe you sold a bunch of assets. You're going to owe a big tax bill that year, but it doesn't have to be that way, because instead of selling all of your assets, you could sell 90% of your assets and contribute 10% of them to a donor advised fund. Lower tax bill, because you never pay the capital gains on that 10%. And now that 10% is invested. And so the version of what you said that is 100% correct is that in 2025, when it comes time for you to give to charity, right, and you want to give and you have the assets, et cetera, instead of giving that out of your income, instead of giving that out of your bank account, you have this donor advised fund set up and you can give the money there. It's already set aside for charity. And so the only issue, to be honest, the donor advised fund is such an amazing deal. The only issue is that most of the incumbent providers, most of the large providers in the space, the Fidelities, the Schwabs, even Vanguard, charge relatively obscene fees for their donor advised funds. They charge easily. Vanguard, which is well known for being one of the most inexpensive financial providers in the world, charges 60 basis points, 0.6% for their donor advised fund, right? You know, if you put aside $1 million, you are going to be paying thousands of dollars in fees every year for this donor advised fund. And to be honest, it's worth it, given the tax benefits. But of course, that's why DAF is here. We use modern technology, brand new stack. We're available on iOS and the web. and we charge a flat rate. Our highest tier of service is just $20 a month. That's all we charge.
That is incredible. You guys have figured out a way to do donor advised funds at $20 a month to essentially pennies on the dollar versus even like the Vanguards that, let's say, on $1 million are charging $6,000. And so if I'm hearing you right, Adam, if I had a $100 million donor advised fund, it could be $20 a month versus $1 million. Does it make no difference there? Or walk us through exactly what Daffy offers as well.
That's exactly right. And I know it sounds too good to be true, but honestly, from our point of view, we just want to see the money put aside for charity. We just want to see money going to these organizations. So we run things as low cost as possible using technology. But that's right. If you had $1 million in that Apple stock, going back to that example from earlier in the show, you had $1 million in Apple stock. You can donate that stock, open up a Daffy account, send the shares to us. You get a tax deduction for that full $1 million value. Assuming that your adjusted gross income is large enough to support that kind of deduction. And we charge you $20 a month, right? And then anytime you want to give that money to charity, we have an app on your phone. You can do it from the web. We have a database of almost every legal charity in the US, over 1.5 million charities. You type in the name, you pick the charity, you pick the amount, boom, we get the money to the charity. We really try to make it as easy as possible to put money aside for charity, get that tax benefit, and then give that money to the organizations who need it.
Amazing. Adam Nash is changing the world by using technology to decrease fees on donor advised funds so that there's no excuse for any of us not to be setting up one of these. Go to daffy.org. That's daffy.org. Adam, what questions haven't I asked you yet before we go in the lightning round that I should have asked you so far? Or anything else you want to touch on?
Well, the only thing I'll say is that it's very easy to get started, right? I understand that for most people, they don't have a donor advised fund, but this isn't something that you have to open up with $1 million or 10 million or anything like that. You can start basic. We take any type of funding. If you want to get started, just having one app where you give money to charity, you can put in $1,000. You can put in $100. Actually, our minimum is people putting aside $10 a week. So there's really no excuse not to get started. But I think once you find out what a donor advised fund is, and if you do have gains, if you have investments where you have to think from a tax perspective, what's the best way to do it, you're going to find that having a donor advised fund in your back pocket is an amazingly powerful financial tool.
My mind's already exploding now, especially when you went to the cost of it. It's so exciting. So I guess one other question I have is, because it's so efficient and low cost with daffy.org, why wouldn't, is there ever a situation where you'd say, no, just give directly to that charity, right? In other words, it seems like from what I'm hearing, and correct me if I'm wrong, that you would always just go to daffy.org because it's so low cost and then go to the charity, right? Because you're going to get that double benefits, like you're saying. Or am I missing something?
No, it almost always makes sense to use a donor advised fund. First of all, let's be clear. Most charities are not set up to take stock or real estate or crypto or any of these things, right? And so having the donor advised fund means the charity doesn't have to worry about that. They just get cash. That's what they can most easily. They're not financial experts. They're a charity. They're in there for a cause. They're helping people. And so the donor advised fund helps with that. Also, most people really love just having all of their donations in one place, all of their tax receipts in one place. And a lot of people like setting up recurring donations, right? Most of the organizations I support every year. And Daffy makes it easy to kind of set a donation where you give money to the organization every month, every quarter, every year, whatever the pacing is right for them and right for you. And so, yeah, so in most cases, you always use a donor advised fund. I mean, listen, if it triggers, if you want to give to an organization, you have your checkbook out, God bless, go give them. We support generosity in any form. But for most people, just from a tax perspective, from a sanity perspective, from a record keeping perspective, doing everything through your donor advised fund. I mean, we even have family accounts. You can have your spouse on this account. You can have your children on this account. You can have your grandchildren on this account, or nieces and nephews. But having everything together from a tax perspective is so much better than just doing one-off transactions where your accountant has to figure out what you gave to charity in any given year.
My mind is blown, and you're already decreasing my stress, Adam, as I think about all the things that we give to, and we love that. But that is one of the biggest headaches, is just managing all of it, right? And like the bandwidth with thinking about another thing for the tax accountant to track down or for us to find or to do. So amazing. Go to daffy.org. That's daffy.org. That being said, Adam, we're running out of time. Are you ready for the lightning round?
Sure, let's do it.
All right, knowing what you know now, if you go back to your 25-year-old self with the one golden nugget, make sure to tell yourself to do.
Tell myself is don't be afraid to do the hard things. Most good things get built over time, little by little they compound. Just don't be afraid. I was very good when I was young about leaning into hard things, but I was always afraid when I did it. I was a little risk sensitive to it, and I would just tell that 25-year-old to not worry and just do the hard things. They pay off.
Amazing. Never question number 2. What's the number one book you've recommended or gifted the most in the past year?
Oh, and that's actually, I'm trying to think. Historically, actually, there's this little book that the Wall Street Journal put out on financial terms and definitions, et cetera, that I still consider the best beginning for financial education. I teach this class at Stanford on personal finance, but that's probably the book that I give out the most. It's a little paperback book, lots of definitions, but kind of fun to go through, and it kind of makes finance approachable for a lot of people who are worried about it.
What's it called again?
I'll have to look it up. It's the Wall Street Journal. It's put out by the Wall Street Journal, a little small paperback book, a personal guide to financial terms or vocabulary. I can send it to you after the show.
Okay, look that up, people. You'll find it. Do some research. We'll like to have the show notes too. Number 3. Question number 3. What are you most curious about right now?
Right now, like a lot of people, I'm looking at this boom in artificial intelligence and these large language models, and just thinking about all the amazing things that are going to be possible with this technology, all the things that can be better with it, all the things that we can do with it. So I think, like a lot of people in Silicon Valley, that's what I'm spending time on.
Awesome. What's the number one leadership quote or theme that you try to live by?
Let me see. Number one leadership quote. Sorry, there are really.
It could be a theme too, Adam. Like, what's a theme? Like, you're like, okay, this is the theme of the one thing that I've been successful. You said in the beginning, kind of doing something that's hard, right? Making sure you're leaning into the hard. Like, what is the thing that you like? Something that you're like, yeah, that's a good theme. It's a good value that really lean into to get things done.
There's a lot of different guidance and et cetera. But personally, I gave a speech at a graduation once where I talked about the importance of painting behind the refrigerator. There are the things you do when other people are watching. There's the things you do when you're by yourself. And to me, character is about what you do when you aren't being watched, et cetera. Because as a leader, you have a lot of opportunities to do things. It's about your internal moral compass, your internal guide. And so the advice I gave in that speech was to always be the type of person who paints behind the refrigerator, always be the type of person who does the right thing, even if it won't be immediately visible. And I try to lead and live that way as well.
Amazing. Adam Nash, I want to thank you for coming on the show. I want to thank you for making an impact to give and help people give to the causes they believe in most using donor advised funds. I want to encourage you to keep using your gifts and talents of doing things better in a better way that makes it easier for people to do things, especially for impact and charity. There's the largest world transformation history of the planet that's happening right now. And I can tell you're making a difference and make a huge impact in this world. That being said, for those who want to get in touch with you, would you remind them one last time, what's the best place for them to find you?
Well, you can find me on all social media. You can still find me on Twitter, LinkedIn. It's just Adam Nash. But of course, go to daffy.org and check it out. We have a lot of resources there on both taxes and giving. Our mission is to help people be more generous more often. So join the community. You'll find thousands of other people who are already using Daffy to make their giving better and to be more tax efficient with their gains.
Thank you, Adam. And also thank our listeners listening to the episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. They struggle with clarifying what's even available as it pertains to donor advised funds and giving to the charities they believe in most. And sometimes they struggle with figuring out ways to eliminate the need for the 1031 exchange and defer capital gains tax, eliminate estate tax. And that's why going to capitalgainstaxsolutions.com is an amazing way for you to start and build your capital gains tax exit plan today. That's capitalgainstaxsolutions.com. Also look for the new book that just hit the #1 bestseller, Building a Capital Gains Tax Exit Plan. We hit it in real estate and the wealth category. And we're excited that we have people like Kevin Harrington from Shark Tank in the book. And if I do come out with the next book, I promise I'm going to have Adam Nash in the book, because that's probably the one thing the book does lack. We didn't go much into charitable opportunities, but now that I found Adam, I would love for him to be on the book. And if you also agree with that, please leave a review and mention that in the review so I can have Adam in my next book if he so would like to be in the book. That being said, appreciate everybody. Please share, review, anything you do to support